And look, this has been a slow motion train wreck for years now. Management's consistently moved the goalposts. Every single time they had a weak quarter, they either, scoffed at, competition, or maybe they are kind of alluded to it, but never really owned up to it. But this was a capitulation quarter, 100%. They just, admitted and owned up to everything we've basically been saying and the key points of the bear case, for a long time. How are they going to fix this, right? So they're looking to crack down on password sharing. The problem with that is it's going to piss off a lot of their subscribers because password sharing has long been a feature of the service. One of the key points of the bull case has always been that it's this incredible value and there's a tremendous amount of pricing power. My pushback has always been, well, look, Netflix has basically underpriced the service for so long that they've trained the consumer to basically think that this is what the price of content is worth, right? So you do that for such a long period of time, and then you're going to have a harder time raising price, at least across all your plans, right? And then if you start trying to charge extra for things like passwords, for extra users and password sharing, that's going to, turn people off. But by far the biggest event of that conference call was them basically saying they're going to get into advertising, and Reed Hastings saying that they're going to, explore getting into advertising. I mean, I always thought that it was a strategic misstep, right? Because the lifeblood of the media industry is advertising, all these legacy media players. And so, sure, Netflix was growing engagement and share of time spent, but if they really wanted to hurt their competition, they could have launched an ad-supported tier, which would have soaked up a ton of advertising dollars away from their competition and would have probably prevented them from being able to fund a streaming service launch, right? And going direct to consumer. And in that case, it would have actually made Netflix's, it would have made the legacy media companies more dependent on Netflix, right? For that licensing revenue. So they clearly underestimated the competition. And now they're paying the price for it. So now content costs are going to continue to accelerate. They're going to continue to grow. There's more competition, right? And so you really enter a death spiral, right? Where margins come under pressure, costs continue to go higher. There is no more growth. And you have limited pricing power, and you're one of the most expensive streaming services in the market with, some of the, I don't want to say the worst content, but at least relative to peers, right? Your content isn't performing as well. So if things don't get better, and I have no confidence that they can actually execute against their plans to launch an ad-supported tier, they said it could take up to a couple of years. If things don't get better, the stock can be, well below $200.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.